Yeah, it lists all boats to varying degrees, and so the risk then is okay. Well, I own this token. Last all-time high was 2021. Hasn't really performing too well. Should I just realize a loss, take the L, take that capital, and invest it in something which I think does 10x?
What the hell is going on with the markets? Is alt season cancelled, or could we see a saving grace from an unlikely place? And where are Bitcoin and Ethereum going by the end of the year? And what else should you be exploring? Well, all of that was recently covered in an interview we did with Arthur Hayes. So if you want the answer to any of those questions and much more, don't miss this. Hello, everyone, and welcome to another interview here on Coin Bureau. And today we've got a very special guest, Mr. Arthur Hayes, third time on the channel. And in case you guys haven't been in crypto for more than a week and you have no idea who Arthur Hayes, aka Crypto Hayes, is, he's a real crypto OG. He's obviously the co-founder of the pioneering BitMEX Derivatives Exchange, and he is the CIO of the Maelstrom Fund, his family office. And Arthur, welcome back on the channel, man.
Thanks for having me. I'm excited.
Exciting stuff. Got lots of stuff to cover. It's obviously with this interview is taking place right now in one of the most crazy days in the markets. And before we dive right in, I just want to quickly say, guys, of course, that nothing in this interview is financial, investment, or life advice. So please consult your financial advisor before making any investment decisions. Okay, so Arthur, let's start off with the most important question first in terms of what the hell is going on in the markets. I mean, we've seen like the yen is ripping, the carry trade is unwinding, the VIX is spiking, the recession fears, there was massive crypto dumping over the weekend, potentially around a fund that you alluded to in a tweet blowing up. And it's just really all markets are going haywire as a result of mostly as a result of what's been happening with the yen carry trade. So I guess the first question is like, what exactly do you think is going on? And how do you see it playing out over the next few months?
So I guess before I get to the yen carry trade, which I think is the most important thing that's going on right now, and I've written I think two essays about what's going on in Japan and what has gone on in Japan for the past 2 to 3 decades to lead to my thesis that the dollar yen exchange rate is the most important variable to the macroeconomic landscape. But before we get there, I want to talk a little bit about something a bit esoteric, which is the US Treasury's quarterly refunding announcement. Now, unfortunately, I had a really awesome essay that was going to drop either already today or next day to talk all about this and what I think was going to happen, and then this shit happened, and then I got to write about the yen.
Got
So
sidetracked, yeah.
yeah, but
Slightly sidetracked. Small diversion, yeah.
but at a very high level for the second quarter of this year, from basically April until June, due to tax receipts in the U.S. Treasury net took Treasury bills, which are bonds that mature less than 1 year, have no coupon payment, out of circulation. And that's what's caused the reverse repo facility, which a lot of people have been tracking, to basically, it bottomed at the end of March, early April, and essentially rose a bit, which removed liquidity from the system. And basically, starting in April, we had the weakness in crypto, and we haven't really recovered from it since. Now, that is all starting to change in July and August and September and the rest of the year, as the Treasury has communicated to the market that it will now begin reissuing on a net basis Treasury bills because it needs to fund the government. And my cynical view is that it needs prices of stuff to keep going up into the election in the US. Now, that's kind of like my reasoning as to like why crypto, went down, didn't really do much over the summer, is because the dollar liquidity situation was not very conducive to assets like crypto doing super well. Okay, that's a very small technical thing. If we move to what's happened in the last, 4 trading days, which really started when dollar yen peaked at 162, I think earlier in July, is that the dollar yen carry trade is beginning to unwind. And for those of you who don't know what that is, the carry trade is when I borrow a currency with a low interest rate and I invest in assets of another currency that yield more or have a higher expectation of price appreciation. And so Japan Inc., which is the central bank, the BOJ, Bank of Japan, Japanese corporates, banks, insurance funds, pension funds, households, essentially all grouped together, have this carry trade on in about 25 trillion US dollars of size. So it is the largest position and most important trading position in the world, and it's architected because the BOJ essentially is creating yen out of thin air, and various Japanese entities are borrowing that yen and buying domestic stocks like the Nikkei 225 and bonds, Japanese government bonds, JGBs, and then they're going abroad. They're investing in US Treasuries, which have a higher yield than JGBs, and most importantly, they're buying stocks. They're buying US tech stocks and the S&P and the NASDAQ and all this kind of stuff, right? And so over the last 20 to 30 years, it's built up this massive position. And as the yen weakens, this trade makes money. And because the BOJ alone can determine essentially what the dollar-yen exchange rate is based on how much liquidity in terms of yen they want to print, they can print that exchange rate wherever they want. Now, a weakening yen isn't really a problem until inflation shows up. And so obviously inflation has showed up post-COVID, oil is up, goods inflation is up. And so for the first time in about 30 to 40 years, Japanese people are experiencing inflation and they're not happy about it. Obviously the media is not really reporting this, but on the ground in Japan, there's a lot of rumblings. I was like, what the fuck is going on? Why is stuff more expensive? My wages haven't gone up enough. Property prices are going up, rents are going up. And so there's been a lot of backlash at the government officials. And finally that got to too much. And the BOJ had to communicate, yes, we're going to normalize policy, which means we're going to start unwinding this trade by allowing interest rates to rise and raising interest rates and stopping buying of JGBs. That started, the meeting was on the 31st of July. The market had expected this to happen a few days earlier. And that's kind of, the first move was 162 down to 155, 150 in yen. Once the meeting happened, boom, that was about 5 days ago. That's what really kicked off this shit show, which is dollar yen went from about 155 to, I think a low yesterday was 142. Now we're at about 145 right now.
It's fascinating. You don't think that because I think that earlier in the year they moved from negative interest rates, the BOJ, to zero. You don't think that markets, was the markets not expecting potentially that these interest rate rises would happen eventually because of these factors you allude to? Given that the yen had been super strong, super weak previously, and people have been complaining in the population. So you don't think that this could have been, people could have seen this coming potentially? The yen carrying trade would unwind so violently?
It's like an unstable avalanche, right? You know, looking at the snowpack, that it's unstable, but you don't know which snowflake that falls is going to be the one that triggers the avalanche. So I guess it wasn't moving from minus 10 basis points to 0%. That didn't do it. But from going from 0 to 0.25%, 25 basis points, that was the thing that did it. Who knows? I mean, we just know that there's an unstable pile of shit that's in Japan, and they own all these assets around the world funded by yen. And this little change in the BOJ policy was a thing that set it all off. I don't think the BOJ thought that this would happen if they've communicated this policy. The whole point of what they're trying to do is to say, hey, we know there's a problem. Over time, we're going to get out of this position. So here's a very glacial pace way that we're going to cease manipulating the JGB market and cease printing money and allow the yen to gradually strengthen over time. And then gradually we'll be able to unwind all these positions. And so there's nothing to see here. Nothing's going to happen. No need to freak out. It's going to be super calm and collected. Now, obviously, that isn't what happened. They didn't think this was going to happen.
Fascinating. And obviously, they're going to probably hike at the end of the year as well. I've read the BOJ. So do you think that this unwinding will continue throughout the rest of the year? I mean, the Nikkei is up now again, higher than it was yesterday. So that's pretty crazy. I mean, do you think the carry trade is going to continue unwinding? How much do you think it has to go?
I think that this is a structural trade that has to unwind over time. And so the BOJ might try to massage it, but ever since Kuruda stepped down in April of 2023, you would assume the mantle of BOJ governor specifically to unwind this trade. The question was, how fast are they going to do it? I would find it very unlikely that they're going to reverse course and say, oh, sorry, guys, we fucked up. we're going back to negative rates again. We're going to go unlimited JGB purchases. Yen goes from 145 to 180 to 200. And, Japanese people start getting really, really pissed off. I don't think that's what's going to happen. I think, and this is what I'm going to write about, is that Yellen and Powell will save the day by printing dollars and allowing the BOJ to unwind this trade and put it on the Fed's balance sheet.
Crypto Podcast.
Okay, welcome to the Bro Crypto Podcast. I'm Chadimus Maximus, go by MaxChad100 on Twitter.
And I am Gigadick, the dude with the biggest P&L in all of crypto.
Bro, say what? My P&L is 100% bigger than yours.
Bro, please. I was longing Doge and drinking neat Belvedere while you were still spot buying BTC on Mount Gox, bro.
Bro, you still driving a 2020 Aventador. Where's your Bugatti at?
Bro, when bonk hits $1, I'm going to be rocking a super yacht while you're still stuck in traffic, bro.
The Bro Crypto Podcast is sponsored by the Coin Bureau Deals page. If you're looking for trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 and amazing discounts on hardware wallets, then don't be a bro, be in the know, and check out the link in the description below. And now, back to the show.
Bro Crypto Podcast.
Bro.
Bro.
Bruh.
Bro.
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 And then coming back to, because you mentioned her, obviously, bad girl Yellen, because I know that you also alluded to this post you wrote, like earlier in the year around the Treasury General account. And I say there's this it seems as if the Treasury's become kind of political now to try and increase liquidity running into the US election. Do you think the Treasury has now become a political entity to a certain degree that, trying to
It's always been political. I think it's always been political, but the degree to which the establishment hates Donald Trump is influencing them to be very obvious in the ways that they're ramping markets right before key election dates. And so I am 100% confident that Yellen will do whatever is possible to help Kamala Harris's re-election chances. And that's also, an essential linchpin assumption to my belief that the Fed and the Treasury will use some of these esoteric programs that they have been already approved to use, like the central bank liquidity swap, to essentially print dollars, hand it to the BOJ, so the BOJ can hand out dollars to banks and corporates to say, hey, don't sell those US bonds, those US stocks in the open market, hand them to me. I'll give you last price, no market impact. And here are some dollars. Go take those dollars, sell those, buy yen, and then come and buy these JGBs that I want to sell you too. And this kind of shifts around the exposures between the different entities. But at the end of the day, the trade doesn't have to unwind. The yen strengthens, dollars are printed, US markets continue to ramp, and the Democrats think they can get reelected.
Wow. Yeah. So obviously, this is now on the macro side, so massive impacts on global markets, as we just alluded to, right? But it's obviously had a massive impact on crypto. So I guess, do you think, firstly, when it comes to the carry trade specifically, do you think that there are funds and crypto funds and entities engaged in borrowing yen to actually invest in crypto on the risk on side? Or is it just a factor that people are generally selling out of risk on assets in broadly and everyone's then selling crypto because that's in the same, now it seems to be in the same bucket? Do you know that people actually engaged in buying crypto through this carry trade?
Absolutely, people do. It's a very standard practice if you run any sort of TradFi-ish fund. You want to have the cheapest cost of funds as possible. And so if your risk managers allow it, and I'm sure there's a lot of funds that do, and you have access to yen from your bank or your broker, you're going to borrow that yen and you're going to fund it, and you're going to buy Bitcoin ETFs. You'll buy some Bitcoin spot or whatever it is that you can buy in the crypto ecosystem alongside the stocks and bonds that you might invest in as well. So it's just another asset. And if you look at the Bitcoin Japanese yen price before, 3 or 4 days ago, it's been screaming higher. So the trade has worked. And so you're like, great, let me just do some more of that. If the BOJ is going to keep these rates at zero, I'll take rates at zero. Buy Bitcoin, it's, best performing asset since 2009 in human history. Yeah, that's a great trade. I'll keep doing that. So absolutely, this borrowing yen has filtered into the crypto ecosystem. And then on the other side is when you have a correlation in one moment, like a massive de-risking across the whole financial ecosystem, you sell what you can, not what you want. And so, okay, crypto's liquid. You can sell it immediately. Those dog shit commercial real estate properties you have, or that REIT that trades at a discount to NAV, or some of the other shit that you have in your portfolio that isn't as liquid as crypto, you have to hold on to it because you don't want to basically get completely annihilated on the market price selling into a super liquid market. Sell your crypto; it's liquid.
Okay. Yeah, and it seems there was a lot of selling, especially over the weekend. We've seen unstaking of ETH there. Do you think that this was related to an unwinding of what's going on with the yen carry trade, or do you think it was a particular, like, rumors? I mean, obviously rumors. Everyone's hearing rumors in crypto, right? Like, we don't want to feed to those rumors too much. But do you think that someone big in the crypto space, as you tweeted, is exiting the crypto market or has blown up?
There's probably there's some of that going on, and some of yen carry trade unwind. Yeah, so there's a bit of both.
Okay, cool. So then more broadly, let's assume, come back to the markets, come back to crypto markets and Bitcoin and potentially alt season. Like, it's been delayed for quite some time now. When is the season coming? Delayed season. Do you think that now with what's going on with Yellen and running into the US election, do you think that when do you see alt season coming? If we're going to see any sort of alt season or Bitcoin recovery and past its all-time highs, do you still think we see that before the end of the year?
So I think it's very path dependent. So let's say this is my belief, and take it with a huge grain of salt. So I think that U.S. authorities, Fed, and Yellen particularly, because she really runs the show, get very concerned if stocks drop more than 20%. So all-time high in S&P and NASDAQ was in middle of July, and now we're about 10%ish from that level. If we see S&P and NASDAQ down 20 to 30%, that's a big deal. Because if you think about it, the rich baby boomer voters who got to show up at the election, vote Democrat or Republican, are going to be very pissed off at whoever's in charge. It doesn't matter what the party is. That right now it's the Democrats. They're in charge. So if you have a financial crisis on your watch, and my stock portfolio is down 20, 30%, and now I have to stop traveling around the world and adjust my lifestyle, I'm going to be pissed off. And worst case, I vote for the other side, Trump. A little bit less worst case is I just don't even show up. I don't vote. So I was going to go out and vote for Harris. Now I'm just going to sit my ass at home because you fucked up my stock portfolio. You should have done something. Why is there this financial crisis that's happening in the middle of election season? So I think that the level of stock prices is very important. And on the other level is the U.S. government funds a large part of its revenue from capital gains taxes, from basically tech stocks. In certain states like California, their whole income statement is basically how much money did they make from tech bros because their stock portfolios went up. And so again, if you're seeing stocks down 20 to 30%, no one's paying any taxes, your deficit's going to explode. So the US government needs a higher stock market. And I think that is the trigger that could get these guys to act very soon. So if we go into Friday and S&P and NASDAQ are down 20% from the highs, and it's looking like over the weekend it's going to be, quite volatile opening on Monday, then I think we could get some sort of action over the weekend. But that depends on if yen, if I retraced a bit, if it comes back down and strengthens some more, we get more equity weakness into the weekend, then we could get something in the short term. If, this kind of crisis fades out, nothing really happens, things tread water, then I think we got to wait a bit, maybe 1 or 2 months. Come into the fall, people get comfortable again, and then boom, it starts again. And then they'll definitely have to act then because they'll be, a few weeks or a few days out from the U.S. election. And again, Harris cannot have, going into the, early November, the key cohort of rich baby boomers not feeling good about their stock portfolios. So that's definitely going to be attributed to her and Joe Biden, even if, it's not their fault.
Yeah. All right. Well, I mean, he's called them the Kamala crash. So.
Yeah.
Good branding. Is always one to jump on the branding. And that's actually a really good, following on from that, because I think that it seems that now crypto has become very political, at least in terms of what's going on in the US. And it brings me to one of your recent posts, I think two posts back, which is really interesting. And your writing style is it's quite a unique writing style. I really do love it. And it was aptly named Hot Chick, right? And I just want to, explain to the audience exactly what the story was. You were at a villa party in Ibiza, and you saw Leo DiCaprio being hit on by a hot chick, or a baddie, as you'd say, and she was trying to take him home. And you were analogizing this to. It's pretty cool. Was that true? Is that a true story? Like 100%.
Yeah, it happened. Absolutely.
Cool, man. Well, good on Leo, man. I mean,
Exactly.
Leo DiCaprio problems. So anyways, you were at this party and you were analogizing this to the way in which politicians in the US are trying to court the crypto votes and court the crypto industry, right? And the post talked about your idea around a bill that could potentially, more strategic around how voters could allocate their votes to get the best outcome, irrespective of party. But I guess the first and most important question is, like, do you think that this crypto becoming so political in terms of like one side versus the other is a risk potentially, because betting all on one side or the other? And do you think how do you think it's going to play out?
I guess it's only a risk if the market assumes certainty of victory for a particular candidate. Obviously, that's Trump, right? So he had the really amazing debate performance. Well, I guess Joe Biden just basically proved he was a fucking vegetable. We already knew that, but now everyone saw it on national television. And he had that amazing photo after he got shot, or assassination attempt, right? That was the highest, in my opinion, probability of a Trump victory that he would ever have. And then Joe Biden got replaced with Harris. Harris might be a complete fool, but she's not 80 years old. And, she's whoever she is, it doesn't really matter. She's just not Trump. And so she's going to do better than Biden just by mathematics. So Trump's chance of winning is going to fall. So if you were a Bitcoiner or a crypto person, you said, I'm going to buy more crypto because I believe that the US regulatory stance is going to change in a favorable manner to my portfolio. And that means I believe that Trump's going to win. And look at how amazing he's done. But now those odds are sliding, then you're going to become less bullish about doing that. I think that's a bit about what's happening. I think in the longer term, it doesn't really matter who wins, because whether it's a Democrat or Republican person, they both will hand out goodies to their constituents. The Republicans will cut taxes. The Democrats will do more government welfare. At the end of the day, the deficit rises. Money is printed and borrowed, and the denominator amount of fiat global dollar liquidity increases. Therefore, Bitcoin and crypto goes up. But again, that's not an immediate term thing. It's just a result of what happens in American electoral politics. So yeah, there's a risk that come November, if you were saying I'm going to buy more Bitcoin because of Trump, and it looks like Trump might lose, or it's a coin toss with Harris, then that sort of premium is going to fade from the market. And I think that's already happening as Trump's election odds are diminishing.
Got it. Yeah. I mean, she's also like now trying to apparently reach out to the crypto industry, right? And do you think that, and I've seen different perspectives on this on crypto Twitter and whatnot. Do you think that the industry, I mean, I know she's also trying to court the votes and this kind of stuff, and she's trying to be just like that baddie with Leo, but do you think that the crypto industry should spurn that because they were historically very hostile to it? Or do you think we should at least hedge our risks, or any other sort of strategies to get the maximum out?
I think the crypto ecosystem or American crypto voters should get paid first, right? So if you want to support XYZ politician in a congressional, senatorial, or presidential race, well, the first question should be, what are you going to do right now? Yeah, okay, cool. I can give you some money now and you promise to do something in the future, but we know that I can't hold you to that promise, right? It's not a direct bribe. So I want you to do something first. So if you want me to show up on the election day and vote for you to become reelected in your position, then I want, I put forward a free speech bill for crypto, but whatever it is, something, I want that now. And so any incumbent politician has the ability between now and election day to do something positive for crypto. So the base case should be, I'm going to go to this politician and say, I'm going to support your opponent unless you do this. And this isn't a money thing. It's literally a coordination of people who believe that cryptos are most important voting issue and saying, I'm going to vote like that. And so I want you to do something for me before I give you my vote in November, versus the other way around, which is, hey, I'll give you some money today and I promise to vote for you. Please do something after that when you're already in power. There's no leverage there. So that's my point.
So that's enough politics for now. Obviously, it's always present now as we run towards November. But I want to move on to now when the some of the legendary crypto haze alpha, right, in the crypto space. So if you are looking into altcoins, or are there any altcoins are you buying right now? Are there any cryptocurrencies or projects you're particularly bullish on? If not a particular project, what sort of sectors and narratives do you think will still have potential if we do reach this, more liquidity in altcoin season later this year?
So obviously, I just launched an ordinal drop called Airheads. I'm extremely bullish on ordinals because I believe in the crypto wealth effect.
Yeah.
Bitcoiners will get wealthy if this bull market happens. Bitcoiners will have a lot more Bitcoin, and they're going to want to do something with it over and above, buying bottles at the club and going on a yacht and buying a Lambo or whatever, right? So they want some sort of cultural experience or thing that really speaks to them, and I think that could be an ordinal. It's Bitcoin native. It's a digital artifact. It's distinctly different than an NFT, which in most cases is a scarce digital token paired with a centralized database holding something. And so I think this is a trend that's going to really kick off if we really get this bull market that me and a lot of others think is, on its way to happening. So that's one sector. And obviously the trading volumes are very low. Enthusiasm is low. So this is the perfect time to start building a collection of pieces of, ordinal art that you find resonates with you. Now, the Airhead's a bit funny and tongue-in-cheek. Maybe people will find that interesting, maybe they won't. But it really is meant to showcase the technology of what you can do with ordinals so that other artistically inclined Bitcoiners will do something else and expand the corpus of what we have on the types of ordinals that are out there. So that's one thing. If you're talking about like tradable alts, a lot of things that I'm looking at on sort of the more liquid side are protocols that pay real money to traders are trading at insanely low price to earnings multiples. I'm not going to name specific projects because I'm still buying them and I don't want people to rant me in my face. But one site that I love is Token Terminal, and you can filter for price to sales or price to emissions, and then check out the protocol. Can I stake this coin and get paid continuously in a stable or in another crypto that's not the native governance token of that project, just by hanging around, and I'm getting yield, I'm earning money, versus like a lot of these crypto projects are, hey, I will pay you at some point in the future, the Uniswap thing. I've got billions of dollars sitting in this like foundation or whatever the fuck it is, and I'm just gonna sit on it and create this like fake narrative that there's a connection between owning the Uni token and this pool of money that's sitting there from the biggest fee generating protocol in the entire network, right? So there's lots of that going on. Fuck that shit. You want things that actually are paying you. And these things are not being properly valued across the ecosystem because everyone's just selling everything indiscriminately because they've got leverage positions they need to close. So that's one thing that I'm scouring across the markets, and people can put that sort of framework to use and whatever else whatever vertical makes sense for them. On sort of the more advisory illiquid side, obviously we're an advisor to Aptos. And I think that they've got some very interesting partnerships with TradFi institutions who want to finally move to use Web3 to power tokenization and issuing assets on chain and all that kind of stuff. And that's going to become a better narrative as we start to move up in price. And obviously, my big prediction is the flipping of Aptos and Sol in the next 2 to 3 years.
Yeah, that's actually a prediction. You put it out there in our previous video, and I said I was definitely going to ask you on this. If you could, I know you said you wanted to write a longer thought piece.
Yeah, so right now we're researching, we're writing, we're going to present a very comprehensive model on why we think this could happen, and some of the partnerships that Aptos has signed with some very heavy-hitting TradFi institutions. The details will be revealed probably at their conference where I'm speaking in September in Korea. So there's gonna be a lot of stuff happening between Korea and Singapore this fall, and so stay tuned.
Stay tuned. Okay, cool. And just one more thing on that, in terms of like Aptos versus Solana specifically, like Aptos, obviously one of the main differentiating factors is the fact that it's a move-based programming language for the contracts, for smart contracts. And obviously, many developers I've spoken to say it's pretty efficient, and obviously because it's object-oriented model. But Sui's also in that same bucket. Now, this is one thing I've been trying to like get the sense of like Aptos versus Sui, because those two are in the same kind of like move narrative. So I'm just curious as to why you would say Aptos.
I'm on the spectrum. I don't think the tech matters. It doesn't fucking matter to the person buying these tokens, right? You could sit here like, oh yeah, Move is 10,000 TPS and Solana is whatever TPS and get in the weeds. And at the end of the day, it doesn't fucking matter. Is somebody using this? What are they using it for? Why are they using it? Right? So my thesis is TradFi who wants to go into Web3, that career risk has been removed because now you have Larry Fink on CNBC and all these programs saying BlackRock will tokenize on chain and using public blockchains. They've already started with the BitL Treasury market thing on ERC20, right? So if I am, another senior executive sitting at one of these TradFi institutions where previously it was, let's do distributed ledger technology or private blockchains, which is complete bullshit, but whatever, that was the narrative. That got me my bonus. I used some of these dog shit crypto companies like R3 and other ones to put these proof of concepts that never went anywhere. Doesn't matter. Now there's something that actually is going to be put on public blockchains. I think that's Aptos. And you're not going to do it across multiple chains. You're going to choose one. And so I think that Aptos team has been making themselves very available for these types of people and building solutions catering to them to make sure that if I'm this type of institution and I want to go on chain, I'm going to choose Aptos. That's going to drive transaction volumes. That's going to drive, APT fees and burn on the network. And that has nothing to do with Move. I mean, the technology might matter to their decision-making process, but if you're thinking about me as an average trader and I'm just thinking about meta narratives, Aptos versus Sui, well, okay, if this is the thing, does it matter if they're both Move? Well, where's your partnership, Sui? Where are all these institutions using you to do the same sort of business? Let me see these types of transactions. Who's using it? How are they using it? Why are they using it? So that's what I care about, not the tech.
Interesting. And I'm curious though, because obviously then, Solana versus Aptos, but I guess if you're talking more specifically around what you've mentioned, like RWAs, like, the issuance of these big TradFi institutions on public blockchains, wouldn't the big competition there be Ethereum, right? Because they're mostly all issued on Ethereum. And then coming back to that, do you not think that, do you think these TradFi institutions would feel comfortable issuing on a blockchain that is still nascent, really, when Ethereum has such market dominance in the RWA space?
So I think it's really going to come down to the types of features that they need. So specifically, how does KYC work on chain and some of these things? Is there ways that it works differently on Aptos versus Ethereum without getting into the weeds? That's going to make my product easier to use for the end customer. Because at the end of the day, if you choose a blockchain and it's harder to use as product, then no one's going to use it, right? So I want the experience to be as close to the client using the New York Stock Exchange or NASDAQ or LSE or whatever. When they are used to that, when they come on chain, it should be as seamless as fast. And it isn't going to be like that on Ethereum. Not to say that Ethereum is bad. I'm not saying that Aptos is going to flip Ethereum. I still have massive ETH bags, and I'm not on here saying that is what's going to happen. But I am saying that if I'm going to choose between the two, it's not a Aptos versus ETH situation. It's more of an Aptos, Sui, Solana, one of these other more performant in terms of speed layer ones that I'm going to choose to do this on versus on Ethereum.
Okay, so that's the alpha for where we should be looking. And I guess another important point is, and I know this is kind of like a hot potato question, but sometimes in crypto, obviously, it's not about where you should be looking, but it's where you should be avoiding, right? And we don't necessarily have to mention any coins because I know that that comes with risks or anything, but what sectors, narratives, or in crypto should we be looking out in terms of trying to avoid? Or if you've got exposure to it, potentially looking to, cut your losses if you've been in loss?
I mean, number one is unless you're looking at your position 100% of the time, you got phone alarms on, blah, blah, blah. If you take leverage in that situation and you're fully on it, you're looking at the markets all the time, cool, do that. If you take leverage and you go to work, go to sleep, go out for a drink, have some fun, don't take your phone, turn off your alerts, aren't willing to cut short whatever you're doing to get on that device and manage your positions, you should not be using leverage. That is the number one thing to avoid right now, because yeah, pick a coin, it's probably down 30-40% over the last 2 or 3 weeks. That doesn't mean it's a bad thing or that narrative won't perform well if we have an upturn in the market. That just is a temporary dislocation due to liquidity and market volatility, which destroys leveraged traders who are not monitoring their positions. But if you're unlevered, doesn't matter. So I wouldn't say there's a particular thing to avoid, more so a style of trading where you're inattentive to your risk.
Really? So you think that irrespective of what coins you've invested in, even if they're like last cycle stuff, that reached an all-time high in 2021, or as long as it's all going to get picked up in the alt season. So you think that the alt season is going to be a rising tide that lifts all alt boats, or?
Yeah, it lifts all alt boats to varying degrees. And so the risk then is, okay, well, I own this token. Last all-time high was 2021. Hasn't really been performing too well. Should I just realize a loss? Take the L, take that capital, and invest it in something which I think does 10x, right? That's the decision-making process. It's not, so the fallacy is, I'm going to sell this when I'm back to break even. But there was this other coin in that same time period from now until break even on your old coin went up 10x. So even if you took the L, put that capital in something else, you would have net made money. So that's the decision-making process that needs to happen within your portfolio if you're evaluating things that I invested for this reason. It didn't really happen, but I like this other thing over here. I really think that this could go 10, 100, 1,000x if we really get back into alt season in the next 3 to 4 months going forward. Then I should take the L over here. Maybe not today, maybe wait a week or two for things to stabilize, but take that L, invest in the thing you have confidence is going to perform much better, even though in your mind you want to be like, I should just wait for the market to recover a bit, and then I'll sell the thing that didn't do so well, but I didn't lose any money. Well, you lost opportunity costs on this coin over here. So again, it's a philosophical thing, but that's how you should be approaching how to wean your portfolio between different types of coins.
Yeah, it's an opportunity for sure. I guess it's just like then we come back to the coins and narratives you think are going to perform well generally. So it's like you're trying to pivot out of the ones. But if there's, just rephrasing the question a little bit, are there any narratives that you think are less likely to perform as well as narratives, other narratives you've talked about? So from maybe last cycle narratives or sector of crypto that you think doesn't have as much potential in an alt season to get as much gains as some of the ones you've talked about?
I think it's less about the overall narrative, more about when the token was launched, right? A lot of these tokens have launched at very, very high FTVs, low floats, and they didn't really perform. There's no users, there's no traction, there's no TVL growth. That's going to be a hard token and that doesn't matter. It's irrespective of the vertical. That's just a decision that the team and their investors made about how they want to launch that token. And obviously things that peaked in the 2021 cycle that do not have the metrics to justify the valuation that they had back then are probably not going to do so well this time around. And so those are the things that I would be sort of rotating out of and into other things. And it could be something in the same vertical, just that the vintage is different. Your entry price is different. It's new. So I'm not going to evaluate it with as much stringent glasses as something that was, been listed for 3-4 years. And I can see, did the team do something or not?
Yeah, and less likely to face sell pressure when some people get close to even break even, right? Which is far from a lot of these past cycle cryptos. Okay, so just quickly looking at some predictions, right? Like I know that these can be hit or miss, and I know that I don't want to hem you.
Lots of miss.
Lots of miss. Like, predictions, like there are so many predictions in crypto. I mean, every single day, like next day prediction, next week predictions, 2020. Or you Van Eck and you do like a 2050 prediction on Bitcoin or something like that, like when we're all dead and it's only going to benefit our grandkids. But again, what do you think in terms of at the end of the year? Where do you think we see? Obviously, it depends always on election, depends on what happens with the Treasury and all this kind of stuff, liquidity. But where do you think we see Bitcoin and Ethereum? It can be a range. I'm just curious.
So Bitcoin, my rough target is 100,000 for Bitcoin. ETH 5,000.
Okay, got it. And then coming back to another point there, because you were pretty prescient in your post about Biden dropping out. So right now, where we stand, where do you see the U.S. election going? Who do you think is going to win?
I think right now, Harris, slight favorite, very slight. If there's a financial crisis between now and the election, then Orange Man looks a lot better. So all the more reason to get her people to print the money and ramp the stuff.
So instead of looking at the prediction markets, we should be looking at what the S&P and the S&P is doing, because that's essentially
absolutely. What's the S&P? What's the price of gas? That'll tell you who wins the election. That's it.
Got it. Okay, cool, man. And then just others, running off a little bit, I want to obviously talk a bit more about Bitcoin ads, because obviously we'll leave a link to a press release about what Maelstrom is doing, an open source grants program for Bitcoin. And I just wanted to find out exactly how can people contribute to this? How can they get involved? And why you invest in this kind of grants program and why it's important to you.
So I'll say, number one, why is it important to me? My entire financial wealth is predicated on Bitcoin being a successful thing, right? And so if you have the ability to help people further the strength of Bitcoin, make it more censorship resistant, further this goal of removing money in the state, then we should do that. And if we fail to reinvest into our own ecosystem, then we deserve to essentially be co-opted by the BlackRocks and the Vanguards of the world, who have no care for what Bitcoin could be for 8 billion people in the world. They just care about AUM. So that's the selfish reason. Like, Maelstrom doesn't exist if there's no Bitcoin. So surely we should help, send a few shekels so that some people can do some research. How do they get involved? There's a website. There's a grants application. Jonathan Beer, who runs BitMEX Research, who previously ran the grants program at BitMEX, will be evaluating the proposals, and we will be communicating people who receive a grant probably in sometime in September.
Okay, cool. And then talking about more the sustainability, which is help in development on Bitcoin, the sustainability of Bitcoin long into the future. I'm curious to get your take on more broadly the Bitcoin L2 space, because that seems to be going crazy these days, and there's so much being built there. And do you think that is the technology? Do you think that the Bitcoin L2 space could save Bitcoin in terms of later on, when we've got the situation where we have to rely on fees and mining rewards are cut to zero and just building more value on Bitcoin?
Absolutely. So, and obviously we're an advisor to a L2 called Mezzo. And I believe that one of these things will crack the nut and be able to bring, smart contracts or DeFi to Bitcoin. And obviously this is the biggest ecosystem. There's some reticence for that from some core developers. I get it. Security is paramount on the network, but at the end of the day, miners need fees, right? And so same with ordinals. People poo-pooed ordinals. Oh, it's just trash. That's spam on the blockchain. Well, this trash and spam paid the fees. And the whole point is this is an open network that anyone can contribute to and participate and use. They're willing to pay, so they should be able to use. So we need to create a similar sort of way for DeFi applications to exist on chain and pay fees for usage. So I'm absolutely think that this is a key piece to Bitcoin going forward and becoming more usable, as long as we don't compromise on sort of the moneyness and security. So what I don't want to happen is to become another Ethereum, which Ethereum gave up its moneyness when they decided to bail out the DAO and get behind this hard fork. Now, it's fine that they did that, because I believe that Ethereum isn't money, it's compute power. It's a decentralized computer. Being money and trying to be the commodity that funds the decentralized computer, obviously were intractable things that couldn't really mesh together. And that message was delivered loud and clear with how the community reacted to the DAO hack in 2016. So that's sort of my feeling on the issue.
Thank you very much, all, for taking the time again. I really appreciate it. And all the best for the rest of the year. Let's see how things play out.
Awesome. Thanks for having me.
Cool, man. Cheers.
And that's it for our interview today, guys. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. It would also be great to get your feedback. So let us know your thoughts on the topics covered today in the comments down below. Thank you very much for watching. Nick out.